Wait, you just sold your stocks, got a $10,000 gift from your aunt, and hit the jackpot in Vegas all in the same month? Congratulations and condolences, because my friend, you've just triggered 3 taxable events. The IRS doesn't just love April 15th, they love every moment you make or receive money. And if you don't understand how these taxable moments work, that surprise letter from Uncle Sam will feel like a breakup text. Something like, "Hey, we need to talk about your gains." Today we're breaking down 3 of the most common taxable events people get blindsided by. Number 1, selling your stocks or crypto. Number 2, receiving gifts. And number 3, gambling winnings. By the end, you'll know exactly what triggers the taxman, how much you might owe, and how to prepare before the IRS even notices. Let's start with one of the most common taxable events, selling stocks or crypto. Whenever you sell for more than you bought, that's called a capital gain. And the IRS says, "We'll take a slice of that. Thank you very much." There are 2 types of capital gains, short-term and long-term. If you sell within 1 year or less, that's a short-term gain, and it's taxed at your ordinary income rate, anywhere from 10% to 37% depending on your income. If you hold it for more than a year, it's a long-term gain, and you get rewarded with a lower rate, usually 0%, 15%, or 20%. Here's a quick example. Sarah buys Tesla stock for $5,000 and sells it 6 months later for $8,000. That's a $3,000 profit taxed at her regular 22% bracket. She owes $660. Now John buys the same stock for $5,000 but holds it for 2 years before selling it at $8,000. His gain is also $3,000, but because it's long-term, he pays just 15%, which is $450. Patience not only grows your portfolio, it helps keep more money out of Uncle Sam's pocket. If you sold something at a loss, you can use that to offset your gains. For example, if you made $3,000 selling Tesla but lost $2,000 on crypto, you're only taxed on the remaining $1,000. And if your losses are even higher, you can deduct up to $3,000 per year against your income. That's the IRS's way of saying, "We know you lost money, here's a tissue and a small tax break." If you're learning something new so far, hit that like button so more people can find this video. Drop a comment if you've ever been surprised by a tax bill before, or if you just want to vent about the IRS. And of course, subscribe to the Financial Watchman for more clear, funny, and honest breakdowns of personal finance, where we keep guard over your dollars so you don't have to. Next up, gifts. People always ask, if someone gives me money, do I have to pay taxes on it? The short answer is, usually no. It's the giver who might owe something. The IRS sees gifts as a transfer of wealth, not income. So if grandma gives you $10,000 to help with your first house, you owe nothing. But if she gives you $20,000, she has to file a gift tax form because it's over the $18,000 annual limit per person for 2025. Now don't panic, she probably won't pay any actual tax. The IRS allows her to apply it towards her lifetime gift and estate exemption, which is around $13.61 million in 2025. Now here's an example. Grandma gives $50,000 to each of her 3 grandkids, $150,000 in total. She files one form, and that amount just reduces her lifetime limit by $150,000. The grandkids owe nothing. So if you're the one receiving, relax, you're safe. If you're the one giving, congratulations, you're rich enough to have gift tax problems. And here's a bonus. Gifts between spouses are unlimited and tax-free, as are gifts to qualified charities. However, if you're gifting to your ex or your side hustle partner, I'm sorry, no tax deduction for that one. Now let's talk about gambling, Because when you win, the IRS wins too. Whether you win cash, a car, or a trip to Hawaii, it's all taxable income. Casinos issue a Form W-2G if your winnings meet certain thresholds. $1,200 or more from slots or bingo, $1,500 or more from Keno, $5,000 or more from poker tournaments, or $600 or more if the win is 300 times your bet. Sometimes they'll withhold 24% federal tax right away, but you're still required to report every win, even if you didn't get a farm. Here's an example. Lena wins $10,000 on a slot machine. The casino withholds $2,400 in taxes. At tax time, she reports the full $10,000 as income. If she lost $6,000 playing other games, she can deduct those losses, but only if she itemizes her deductions. That means she'll only pay tax on $4,000 of winnings. You can claim your losses, but you can't claim your tears. Keep good records, tickets, receipts, or statements, because the IRS wants proof, not sympathy. And if you're a professional gambler, your winnings count as business income, which means you can deduct travel or hotel expenses. But that also means self-employment tax. So being a pro gambler might sound exciting until tax season shows up. So how can you prepare for these taxable events? First, keep records. Every purchase price, sale price, and date. Second, set apart part of your profits. Maybe 10% to 25%, so you're not scrambling at tax time. Third, don't spend your winnings too fast. It feels like free money, but the IRS is waiting for its cut. And lastly, if it's your first time dealing with one of these, talk to a tax professional. They'll help you make sure you pay what's required and not a penny more. Trust me, you never want to argue with the IRS about whether your blackjack win was luck or income. They always win that round. So remember, selling stocks, receiving gifts, and gambling winnings can all be exciting, but they come with tax strings attached. The key is to know the rules before you make your move, so April doesn't come with a surprise bill. If this video helped you, hit like, drop a comment, and subscribe for more smart money talk with a splash of humor. And if you want to support the channel, you can buy me a coffee at buymeacoffee.com/The Financial Watchman. It helps me keep watching over your dollars. Now here's a question for you. Which taxable event surprised you the most? Stocks, gifts, or gambling winnings? This video is for educational and entertainment purposes only. I'm not a financial advisor or tax professional. Always consult a qualified pro for personalized advice. This isn't financial advice, just motivation and information to help you stay alert, prepared, and financially confident. This is your Financial Watchman, and I'm signing out. Bye-bye, y'all.